In this video, we are going to show you how to read candlestick charts like a pro and how bullish and bearish candles are formed and how wicks are formed and the importance of wicks. Also, viewing candlestick charts from different time frames to analyze charts like a pro. In a down close candle, what happens is candles can be viewed from different time frames. But if it's a 1 hour candle, it can be a 2-minute candle. In a down close candle, usually there's a lot of buy side trades happen here. Okay, now let's see how wicks are formed and why they are important for traders. So when the price opens and goes down. Okay, now let's look at real trading chart examples. For example, price has moved up, green candle moved up, but next day the price has gone down. 1 hour, this is New York time 1 a.m. Click and change this into bar charts, change it to an area chart. You click settings and from here you can click and change. So what are candles? Candles shows us the movement of price because we are trading instruments and they have a price and the price moves. If the price has gone up, it is a up close candle. If the price has gone down, we call it as a down close candle. For example, this green candle is a up close candle. This black candle is a down close candle. So normally green or blue colors are used for up close candles. Red or black colors are used for down close candles. You can decide the color, but as a standard, those are the colors being used. In an up close candle, we call them as a bull candle or bullish candle. If it's a down close candle, we call it as a bear candle or bearish candle. So up close means the starting price opened and then the price has moved up and ended up closing up. So we call it as an up close candle. In a down close candle, what happens is the price has started at a price point. However, the price has moved down. So it has a down close candle. So up close means it closes at a higher price compared to the starting price. Down close means it's closed at a lower price after some time period. So that time period can be 1 minute or this can be 5 minutes, this candle, or maybe after 10 minutes. It depends on what you select. Now when the price opens, before it go up, sometimes it can go down a bit and again come back, and then the price can go up, but it can go further up first and maybe it comes down and closes. So because of that, every candle will have an open and a low. That means the lowest price it went and maybe it came back and it went all the way up, and the high, and then it came down and closed here. So every candle will have an open price, the low price, and the high price and the close price. The bearish candles also has the same open, and before it go down, it may go up a little bit and come back, and then it may continue down, further down like this, and maybe it comes back and closes. So because of that, there is an open price, high price, lowest price and the close price of a candle. Okay, now let's look at the concept of viewing candlestick charts from different time frames. Candles can be viewed from different time frames. So these candles, maybe it's a daily candle. So that means on a particular day, the price opens and then the price might have slightly gone down, but then gone up and come and close as a up close. So this can represent the price points of a single day. When I say price points, open price point, the lowest price of the day and the highest price of the day and a closing price of the day, for example, if it's a daily candle. But if it's a 1 hour candle, then it's the same concept. The difference is it's the open price of that hour and the lowest price within that 1 hour and the highest price within that 1 hour and the closing price. It can be, let's say, a 2-minute candle. If it's 2-minute candle, this is the opening price at the beginning of the 2 minutes. Then the price might have gone low, high and close as a up close candle. So it can be daily 1 hour, 15 minute or any time frame of your choice. It depends on what you choose when you trade. Okay, so then the bearish candles, the down close candles also can be viewed in different. So if it's a daily candle, then that means say in that day the price has opened and closed down. Within that it has gone high and come to the low and close. Then again, if it's a daily candle, up close meaning the price has opened and within the day the price has moved up. Why are we talking the price moving up and down? Because when we trade instruments, we are trading and then Every instrument has a price and it moves up or down. Okay, so if the price goes up, what that means is there's possible buying happens, because in trading what you do is either you buy or sell. So usually in up close candle there's a lot of buying happening. Then in a down close candle usually there's a lot of selling happening. Selling. So you can think this as a lot of buy side trades happen here. You can think here as a lot of sell side trades happen. We will look into that soon.
Okay, now let's see how wicks are formed and why they are important for traders.
Okay, now in this process of forming a candle, it can form wicks. So wicks are these lines what you see in the two sides of each candle. Now in some candles you may not see the wicks, but in most of the candles you will see a wick. For example, this is green meaning bullish. That means the price has started open price, gone down and come back, then gone up high price and come back. So when the price opens and goes down between open and the low, it forms a wick, and then between the high and the close it forms a wick. Same in bearish candles, wicks are formed. So wick is generated when the price is pushed up or down and when it comes back. For example, after opening, price has gone down, but then if it's pushed, the price has been pushed up again by the algorithm, which means it has formed a wick. Wicks are useful to understand price action and we will use it a lot in the future.
Okay, now let's look at candlestick charts.
So once you understand candlesticks, then when you look at it as a whole, you call it as a candlestick chart. So in a candlestick chart, let's say if this is a daily chart, you can see on some days the price is green. Green means the price has gone up. And then over here on this day the price has gone down, the black candle. However, the next day the price has gone up because it's a green candle. So likewise, on certain days price goes up close candles, and certain days price goes down close candles. It depends on the buying and selling. So if it's a lot of buying happening, the price will go up. If there's a lot of selling happening, the price goes down. For example, in this area, these are all up close, huge up close candles, meaning there's a lot of buying has happened. But if you look here, in this area, there's a large number of huge down close candles, meaning there's a lot of selling happening. So in trading, it's either buying or selling.
Okay, now let's look at real trading chart examples.
Okay, so now we are in a TradingView chart. This is the micro E-mini Nasdaq index futures. So in this chart, if I want, these are the candlesticks, but if I want, first of all, I can look at it from a daily perspective. So if I select day from here, then all these candles I see are daily candles. So then you can see on some days, I can see on the micro E-mini Nasdaq on this day, it has been a up close day. That means price has moved up. Then next day, the price has again moved up. Likewise, moved up. Let's take over here. So if I'm over here, for example, price has moved up, green candle moved up, but next day the price has gone down. So bearish candle. So each candle is the price movement of a single day. Now if I change this into 1 hour, from here if I select 1 hour, then what I see is each candle is an hourly candle. What that means is over here this is New York time 1 a.m. So at 1 a.m. the price has gone up. Then at 2 a.m. New York time, again the price has moved up. Bullish candle, bullish candle, bullish candle, bullish candle. But over here at 7 a.m. the price has slightly come down. Bearish candle. 8 a.m. price has gone up. Bullish candle. 9 a.m. the price has moved down. Bearish candle. Okay. Likewise, you can change the time intervals and have a look at the price from here. Like you can go into 15 minutes, 1 minute, 2 minutes, likewise. Okay. And the next thing is, when it comes to these are candlestick charts. So you can click over here at the top and you can click and change this from, let's say, from candlestick chart into bar charts, for example. Or for example, from candlestick charts, you can change it to an area chart. However, when we trade, we mostly use candlestick charts because it's easy to visually see with the colors that it's very easy to see, okay, these are bullish entries, these are bullish candles, these are bearish likewise. Okay, and if you need to change the colors of the candles, it's easy. Let's keep the daily just so that it's easy to communicate. Okay, daily chart. Now if you want to change the daily candles, what you do is simply on TradingView right click, you click settings, and from here you can click and change the colors.
Okay, now let's look at bar charts.
Okay, so these are bars, and when you look at it as a whole, it's known as a bar chart. So if it's a up close bar, then it's like, let's say you can make it green. If it's a down close bar, you can make it black. It's the same concept like a candlestick. If it's up close bar, mean it opens and the price has closed higher. If the down close bar means the price has opened at a certain price and the price has gone down. So that means if there's buying happening, the price will go up. If there are lots of sell entries, the price will go down. Now the difference is this is a bar and what you saw earlier are candles. But at the end, it's the same, like it's just a visual difference. So these are candles, these are bars. Some traders like to look at candles, some traders like to look at bars. So you got bullish bars or bearish bars. So you see the open and the close, here open and the close. And this is the bar chart. This is the exact same bar chart for the candlestick chart you see over here. This exact candlestick chart, pause it here, pause for a while, and then go and look here. This is the exact same, its only difference is one is a candlestick chart, one is a bar chart. Okay, so we have come to the end of the section.
If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional.
Okay, so that's the end of the section and we will see you in the next section.